Beginning of the earnings season here in the UAE, ADNOC Gas, one of the first to report. We've got full year numbers and Q4 numbers. For the full year, we've got adjusted revenue up 7%, net income up 13% and record earnings. We are joined on the line by the company's CFO, Peter van Driel. Peter, it's lovely to speak to you again. Good morning.
Good morning, Brandy.
So I've just ruled out the numbers there. Also, by my maths, and tell me if I'm wrong, you've got net profit at just under 6%. How does that all fit into the current pricing environment?
What we have seen is, first of all, with $5 billion income for the full year, a huge increase. We managed to increase our net income by 13% year on year. And that is really driven by basically two factors. First, demand internationally was quite strong. We sell internationally LNG and LPG, condensate and naphtha. The pricing environment was just good for us and we benefited from that. But having a strong price environment is one thing. Your facilities need to be ready to handle that. And for example, our LNG production was about 6 MTPA. Everything went at 100% almost, and we benefited from that environment. Domestically in the UAE, and I've said this before during other quarterly calls, demand again on the back of the growth in the country and including the population growth, that is where we benefited from. On top of that, we also managed to improve the terms of a number of our sales contracts, and that in conclusion explains why this year was so strong for us. And
yet shareholders not blown away by it yesterday. Your shares fairly flat. Why do you think that is?
There was a run-up in the last couple of days, and the share price moved up 5% in the last 3 days. Yesterday there was a bit of a breather for certain investors and maybe some took some profit, but overall if you look at it at the 3-day period, actually the share did really well.
Okay, so the share's doing well before that. Right. You've adjusted your strategy after Q3. How come?
It was an update where we wanted to give clarity to our investors. We grow, and we've been very specific that in the next 5 years, we will grow our EBITDA by 40%. 40. And we're doing really well. We're on track because this year we already realized 14% of that target. We wanted to provide that clarity, but we also wanted to bring to the attention of our investors that we are fully committed to decarbonizing our operations. And on top of that, we have shared with them that the company really is future-proofing itself. The environment in which we operate is changing. The world is changing. The drive for the energy transition, and ADNOC Gas is ready for that.
Okay, let's have a look at some of the things that you have got going on, some of the things that are going on around us all. You've had some scheduled plant shutdowns. When are those going to show up in the numbers, or are they already?
Shutdowns is something that happens normally in our operations. You, in a large facility, from time to time, you must make sure that you maintain your facilities and extend the life cycle of those plants. This time, however, there is one difference, and that is our shutdowns are very much linked to our growth ambitions. We have 2 large projects. One of them is, for example, Meram, which is a new plant to provide ethane to our sister company, Borouge, because that's the feedstock for the chemicals business. And we need to connect those new large investments, those new large plants with our existing infrastructure. So we've guided our investors for that. It is on one hand a normal routine type exercise, but at the same time exciting to see that we're now getting ready for a next step in our growth journey.
Let's have a look at some of the we were chatting earlier about unknown unknowns and known unknowns. We've got a high US dollar at the moment, so that's going to affect your pricing. If we get a trade war, that could be expected to continue. What impact does that have on your competitiveness and your customers?
First, 2/3 of our revenues come from the export, and the export is very profitable for us. The beautiful thing I find personally is that we are so well located in Abu Dhabi here that we can send our cargoes, our deliveries, and basically managing the expectation of our customers quite easily. We're so able to go either to the west or to the east. And demand for our products like LPG and LNG remains strong. So we're very resilient in that sense. The demand for LNG remains strong. I've said that before. We have a number of cargoes that are there long term. That's about 80% of the portfolio. But also those LNG cargoes that we sell in the short term on the spot market, demand remains strong for those cargoes. So in conclusion, the company is resilient and well positioned geographically to benefit from any additional demand and fluctuations in demand.
Okay, so could a high US dollar impact you?
The dollar is very much backed. We are a US dollar company, full stop, right? And our products price often internationally off brand. So for us, we are again immune to any movement in the dollar because we are a dollar-based company.
What do you expect the knock-on effects of various tariffs on energy products? There's a 15% tariff now on US LNG going into China. It's one of the areas that has been lined out if we do get tariffs between the US and Canada. What could that all mean for LNG prices, for LNG flows?
In our case, 80% of our sales have been committed. And that relates to our existing production, but also the new production from Ruwais that will come on stream late 28. Those volumes already have been, contracts are in place. So in that sense, we are not impacted by changes in the operating environment. And most of the short-term transactions are simply done through tenders, and the highest bidder will get the cargo they're looking for. And that is underpinned by our promise and our track record around security of supply. It's not just about price in LNG, it's also about your ability to deliver your cargoes as agreed on time. And we've been doing that since the late 70s. So ADNOC Gas has a really strong track record for delivering upon its promises. And that is why people take deliveries for cargoes only in 28, right? So today they commit to these cargoes, and that's because the security of supply is so important for them.
Yeah, but I guess I'm asking for your view on the market as a whole. What a trade war could mean for the LNG market, given that energy products do seem to be in the crosshairs there.
I think the LNG market is still, it is a transition fuel, and that plays a big role. It is driven by demand, and there are so many sources of supply for customers. It is a pretty global market, and if you are impacted in your relationship with your suppliers, there is a choice for a buyer, right? That is the thing. It is not an immature market. It is a huge market for LNG cargoes. It operates at different parts of the world, and certain parts are impacted maybe by tariffs and other parts not.
Thank you so much for joining us this morning. Peter van Driel is the CFO of ADNOC Gas. Actually, 30 seconds before I let you go, what about your AI spend and your tech spend? Given that's in the papers at the moment, what are you guys investing in AI at the moment?
The investments in AI are really material. So AI impacts us positively in two ways. First, AI runs on data centers. Data centers need energy. ADNOC Gas supply and will supply data centers. So the gas that we deliver to the data centers is one way that we interact with AI. But we're a big user of AI today. Our operations use all sorts of tools that optimize the revenue streams by prioritizing the most profitable gases in our streams. It is interesting to see how you can have, in a short period of time, encouraging results. Also for maintenance, we use robots, we use all sorts of tools to assess the quality of our installations. And then with AI, we can predict where the maintenance is most required. So there's machine learning involved in that, but the predictability in our maintenance operations is more and more driven by AI.
Thank you so much for joining us this morning. The CFO of ADNOC Gas, Peter van Driel.